they'll probably will pay a buck 45 this year, buck 50. If oil's going to be a little better, maybe
Mm.
natural gas might be a little lower because natural gas is now in the 280s. It's very hard to figure out, these commodity swings. But these guys have flat production. They have very low decline rates in their fields, and it was very hard to find 10% yields. Now, when the stock dipped to 11 and change, I came on and you had a 13% yield, 12, 13% yield. I pounded the table on it because it was crazy. Um, last year when the oil stocks got sort of, I mean, they didn't get crushed, but they definitely had a bad period when AI mania was in full bloom for sure, and oil was dropping from the 70s to the 50s, if you remember, throughout last year. So it did have a bad period, but they're partially hedged, and that helps mitigate some of the net commodity swings to them. And it's just if you need a 10% dividend yield, you're not going to get much growth here because they don't preserve any capital with which to grow. And when they do deals, they do them overnight at 8% discounts, which ticks me off to no end. And it kind of takes the stock down that 8%. So they have to issue shares. So the revenue and the production per share stays flat while they grow production and add cash flow to EBITDA cash flow, and the dividend per share tends to same. It's the same as it was 10 years ago, even though the business is 10 times bigger with the significant roll up they're doing.